Hi guys, it's Kirill from Mind Prediction, and today we will speak about candlesticks. Candlesticks are Japanese representation of price movement. And I say Japanese because obviously these are Japanese candlesticks and they've been created in Japan a long time ago. The European representation are bars. They contain the same information but with different outlook. However, Japanese candlesticks are considered to be easily readable. That's why in our daily trading we usually use candlesticks. What information does candlestick give? Well, if the body, first of all, is green or red, or depending on your chart, it may be filled or not, it represents a bull movement or a bear movement. So it has it open and it has it closed, and the aim of the candlestick is to eliminate the noise in the process. The noise can be found within the lows and highs. However, within the time period we're not interested in every small movement, we're interested in the major movement. Usually we're looking from open to close, and this is the first and most important aspect of the candlestick. We're looking at the shadows, which is the movement between the open and the low and the close and the high. If shadows are bigger than the body, which is between open and close, then we can take a certain decision out of it, or we can make a certain conclusion. It's not necessarily a decision making tool. So let's say that we have a 1 hour movement. Let's begin like this. Let's draw our line. So let's say that here is 17 o'clock and here is 18 o'clock. And we have a movement which looks like this. Let's also draw our y-axis, which is the price, right? So here's the price starts like this. It goes up, it goes down, it moves then up, it moves something like this, it makes like this, and it exits at this point here. So you cannot really tell what's going on. There's so much noise. So what we can do is look at the candlestick representation of this. So the open, let's draw it like this. The open is at this point here, right? So we have like this. The close is at this point over here, right? So we can get like this. And this is how we get the body. The lower shadow, it's over here, right? So this is how we get the lower shadow. The upper shadow is over here. This is the maximum of the upper shadow. So we take that here. And what we do have is a bull candle, so probably to be filled if you're looking at the black-white chart. Okay, does this chart actually mean anything? Well, there was a lot of noise, there was a bull movement, and we can say that probably there is a buying pressure. So maybe this will be a buy signal. However, let's look at another chart. Let's say that here it's 18 o'clock and 19 o'clock. The price was over here, exited somewhere here. So we're doing like this. It goes up, it goes down, it makes like head and shoulders, for example. very bad head and shoulders from my drawing. However, like this, and then it goes like this, right? And then again like this, and then again like this, and it exits at this point here. So the open is here, right? So we have like this. The upper shadow is here, so we have like this. We don't have lower shadow as it exists at the lowest point. If we compare it with the candle before that, let's say that these candles are one next to another, what it says? It says that all the buying pressure was eaten by this candle here. So this signifies a bearish pressure. So this is one of the most common patterns that you're going to observe in a chart. Another great pattern is, for example, this signifies a lot of selling pressure, as the chart had been looking like this if we sum through the whole period, and then bam, right? Then if there's an impulse, there should be a correction, and then again should be followed by another impulse. Usually, not always, but usually you can observe this in charts. Okay guys, this is the basics of candlesticks. In future we're going to discuss candlesticks patterns with real life examples and how to trade them. See you soon.